Well, with all the doom and gloom we've been hearing lately on jobs and the economy, an interest rate rise seems like the last thing you'd expect. But the Reserve Bank thinks otherwise. RBA Chief Glenn Stevens has warned that rates will need to go higher because of inflation. Here's finance correspondent Philip Lasker.
As Australia's economic guru took to the podium, there was no departing from his mantra.
Further tightening of monetary policy is likely to be required at some point.
He left us in no uncertain terms with the view that interest rates will have to go up eventually.
It's because the governor still sees China's development as the ultimate economic force through the mining boom, pushing up prices and making Australians richer. Riches, he says, will be spread throughout the economy as jobs, dividends to shareholders from mining companies and more tax revenue. But get used to the two-speed economy.
Those differences are more likely to increase than decrease.
The strong Australian dollar, he says, gives consumers more spending power despite the pain it causes some parts of the economy.
And there are no magic pill solutions to the need to adjust, and there aren't really any alternatives, I don't think.
There was no mention of any threats posed by the massive economic problems facing the US and Europe.
That basically means to me that what's happening in Europe and America, on the big scheme of things, pretty small beer in terms of Australia's outlook.
The governor didn't focus on the run of weaker economic signs in Australia either, like today's Westpac Melbourne Institute Consumer Sentiment Index, which sunk to a two-year low. Westpac blames talk of higher interest rates and the carbon tax.
And the level of negativity about it is about the same as it was a year ago and about the same as during the GST. Clearly they're concerned about the government's decision to put a price on carbon.
The governor was not concerned, dismissing the monthly result as random noise. Philip Lasker, ABC News.